I think you're going to get a spot to buy this Cameco sometime this week. You see this trend line where buyers appear to have been stepping up in the past. And if this trend continues, you want to be coordinating your entry with the crowd. So you want to look to buy somewhere in here. And if you can hang on and accumulate during these pullbacks and maybe sell some during these rallies, okay, every time it gets up near the top of the range, you could do quite nicely in this stock. The bullish case for this stock is that we're going to need a lot more electricity to power all these electric vehicles everyone seems to think are the way of the future as we move towards a George Jetson utopia. And nuclear energy is going to be a big part of the energy mix unless DARPA has already figured out a fusion reactor. So I'm using $20 as my pivot level. Yours could be a little higher or a little lower. There's no one right way to do it. So I'm looking for one more of these signal candles to occur somewhere down here, all right? And then I'd use that point as my stop. So I want to see another one of these nice green days with a long tail somewhere in this general $20 area. Now it doesn't have to be exactly at 20. You don't want to be too delicate with this candlestick analysis. You want to give these stocks a little bit of breathing room without just completely letting go of the leash. So you want to know what to look out for, then keep a reasonable expectation. So this could get pretty choppy in here, okay? Something, maybe a little bit of chop, and that's okay, but you want to keep an eye out for some indications that selling is overwhelming any of us buyers, because no matter how much of us want to buy it, if institutions are selling, we're not going to prop up this stock with our odd lot bids here, okay? So what do you want to be on the lookout for if you do buy this? Well, I'll tell you what you don't want to do is make the mistake of thinking something like this last bottom, as a reason to stop out. You see how this was a bit tricky here? It closed right under that 200-day moving average, and then it just kind of, I mean, ripped. And that was not a stop out. That was actually a good buy point. So if it does look like this with close and then an immediate green candle and rips right back up, that two series of candles right below the trend line, obviously you don't want to get stopped out there. You want to be buying. If you do get stopped out on the red one and then you get a consecutive green day and another one, I mean, you're going to have to get back in. That can happen. It happens all the time. But at the same time, you do want to be prepared to hit the eject button if you do get something like this, but then instead it turns out to be something like that. I mean, you are going to want to use discretion here to stop yourself out. So anyway, this looks kind of like a John Madden screen of an NFL game, but you do want to be prepared to look to get in somewhere around this mess here, right at maybe $20, okay?